Welcome to this explainer. Okay, I want you to imagine just for a second placing your very first trade in the stock market with total, absolute confidence. Picture yourself knowing exactly when to enter a position, exactly when to step back, and precisely how to protect your capital before the price even moves a single cent. You know, for millions of aspiring investors out there, navigating global shares feels less like a strategic, winnable venture and a whole lot more like trying to solve a chaotic puzzle while blindfolded. But what if we could flip that script today? What if I told you the secret isn't predicting the future, but simply mastering a system?
So what is the easiest way to learn without risking your life's savings? That's the ultimate question, isn't it? It is completely natural for beginners to feel this intense fear of losing their hard-earned money when they're staring at those flashing red and green numbers on a screen. You obviously want the reward, but man, the risk feels incredibly steep. Okay, let's dive into this because the solution is entirely within your grasp, and I promise you, it doesn't involve blindly throwing your savings at the wall to see what sticks. The real difference between a struggling novice and a successful, consistent trader comes down to this fundamental mindset shift. On the left side, you've got beginners who treat the market like a casino in Vegas. They're relying on gut intuition, random news events, maybe whatever stock their neighbor's cousin recommended. But on the right side, that is the path to actual profitability. We're talking structured education, leveraging modern charting technology, and putting in disciplined practice. This mindset shift is absolutely crucial because it moves you from just reacting to the market to actively analyzing it. To get you operating entirely on that right side of the screen, we've laid out a clear roadmap for today. First, the confident trader. Second, core trading skills. Third, the psychological traps. Fourth, brokers and platforms. And finally, number 5, the fastest ways to learn.
Section 1. The Confident Trader. Replacing gambling with structured strategy. Shifting away from that guessing game mindset is completely non-negotiable if you want long-term consistency. Let this quote really sink in for a minute. Relying solely on intuition or random news offer events leads to severe drawdowns. Financial markets are ruthless to the unprepared, guys. They demand real analytical and operational capabilities, not just guesswork. If you're basing your financial future on a feeling or a random headline, severe losses aren't just possible, they're practically inevitable.
Moving right along to Section 2, Core Trading Skills, the foundation of long-term consistency.
So the crucial point is, how do we actually build those analytical capabilities? Well, every retail participant absolutely needs these 4 non-negotiable pillars. First up, technical analysis mastery, meaning you can read the story the charts are telling you. Second, risk management and sizing. This is huge. It means calculating your maximum exposure so one bad trade doesn't just wipe out your whole account. Third is order execution speed, knowing exactly how to deploy your limit or market orders efficiently. And fourth, market structure comprehension, understanding things like liquidity and volatility, or simply put, knowing exactly when the market is the most active and the most dangerous.
Now, to master technical analysis, you have to understand the core of it all, which is price action. As defined here, it's the continuous negotiation between supply and demand across global liquidity venues. And look, that's really just a fancy way of describing the stock exchanges, where buyers and sellers actually meet. Every single tick up or down on a chart, it's just a visual representation of buyers and sellers negotiating value. Traders use visual tools to track these shifting sentiments. When you learn to read price action, you are literally reading the mind of the market.
Okay, lean in for a second because here is an absolute insider secret that can save you so much headache. When you see a price breakout above a resistance line, combining that technical move with volume is your ultimate lie detector. If the breakout has high elevated volume, highly valid. But a breakout on low volume? No way, that is a price trap. It's like a sports car with a lawnmower engine. It looks super fast, but it's going to stall out almost immediately. It's a false signal that triggers a sudden, painful reversal. Always check the volume.
All right, Section 3, the psychological traps, the enemy within your own mind.
Because knowing the charts, that is really only half the battle. Even the absolute best technical indicators in the world will fail if you don't manage your emotions. Check out this powerful assertion. Developing a stable trading mindset remains the single greatest differentiator between struggling novices and professional portfolio managers. It's really not about who has the faster computer or the most screens. Mastering your own mind, keeping your cool when the market is chaotic, that is your ultimate weapon. Let's look at the 3 biggest traps that tend to ruin that composure. The first major trap is FOMO, the fear of missing out. We've all been there, right? You see an asset already rocketing upward in this massive extended rally, and you just panic buy at the very top because you don't want to miss out on the profits. The professional's antidote to this? Total patience. Force yourself to wait for a documented pullback or consolidation phase before taking exposure. The market will always offer another opportunity.
And this brilliantly illustrates our second trap, revenge execution. This is when you take a loss, your ego gets a little bruised, and you immediately open larger trades trying to rapidly recover that lost capital. It is incredibly dangerous. Your defense mechanism here has to be strict discipline. Enforce daily loss limits. The second you hit a preset threshold of losses for the day, you must step away from the terminal. Live to trade another day.
Trap number 3 is loss aversion. This is that deadly habit of widening your stop-loss parameters because you're just hoping that a falling asset will magically turn around and recover. Look, hope destroys capital. The best way to beat this is to pre-calculate your risk limits before you even enter the order, and then automate your trade management. You've got to take the emotional choice out of it entirely.
Section 4. Brokers and platforms. The arsenal you need to execute.
Now, what's really interesting about this slide is seeing how regulatory tiers and fee structures vary across the major players. To apply these disciplined strategies, you obviously need top-tier platforms. You can see XDB up top, a Tier 1 regulated broker offering 0% commission on real stocks, perfect for equity investors. Then there's AvaTrade, offering fixed spreads from 0.9 pips. Check out IC Markets, another Tier 1 option known for lightning-fast execution and raw spreads from 0 pips, meaning virtually no markup on the price. And RoboForex offers tight spreads and rebates as a solid Tier 2 option. Your choice here defines your execution costs, so pick the one that fits your exact strategy.
Once you have your broker, you're going to need a charting platform. TradingView is just an absolute powerhouse. It's got advanced charts, custom indicators, and a massive global community. Now, if you're leaning more toward Forex, MetaTrader 4 is a hugely popular beginner-friendly standard that supports expert advisors, basically automated trading bots. But if you want to trade multi-asset global markets, then MetaTrader 5 is going to offer you more timeframes and a built-in economic calendar.
And finally, Section 5, fastest ways to learn your actionable quest log.
We've covered a ton of ground today, so here is the exact, definitive roadmap you can start executing the minute this explainer ends. Step 1. Build strong market fundamentals to avoid those amateur mistakes. Step 2, and I literally cannot emphasize this enough, guys, practice with a demo account. It lets you test strategies in a zero-risk environment without losing a single real dollar. Step 3, master chart reading. And Step 4, create and strictly follow a trading plan.
You know, just remember this crucial fact. True consistency in financial markets doesn't actually happen while the market is open. It stems from strict daily routines that you perform long before the opening bell even rings. Building these habits keeps you hyper-focused on the process rather than stressing out over short-term, unpredictable outcomes.
Which leaves us with one final question for you to chew on. Are you ready to set up a risk-free demo account today and transform all this theoretical knowledge into real-world precision? The roadmap is right there in your hands. The tools are ready to go. And your journey from a fearful beginner to a confident, disciplined trader starts the very second you decide to take that first safe step.